Hello, everybody. Brian here from quantlabsnet.com. Thank you for watching. Obviously, I am Brian. I'm going to do a little something different here from what YouTube's suggesting, the same style that I see what's popular. So give it a whirl. Always let me know in the comments, good or bad. I value a lot of it. And as they always say, subscribe to this channel because it's growing as a lot of our videos are now hitting 1,000 video views in a few days. Thank you for watching and hopefully to provide more stuff for you. All right. So in this video, we're going to talk about HFT strategies for beginners and a practical guide. Nothing presented on the screen here, but let's give this style a whirl. So for the beginners, what is HFT or high frequency trading? It's basically a style of trading put out by the exact same firms, usually market makers, big billion-dollar plus revenue firms, some of them the highest paying in the world for coders. And basically, it's just trading on volume in high levels of speed to turn around trades and have pretty well millisecond data connections into the markets on the exchanges and be able to beat a lot of the sales volume out there. Some of it's corrupt in how they're able to do that. That's another story. If you want to know more, just comment away. So some of the core competencies in HFT, especially if you're trying to make a career out of it, is basic. And the other thing is you can always be HFT like. There's no problem with that on your own trading. There are solutions like I put in my webinar on how to get get your scripts, your programs in the same data centers as where a lot of these firms are hosted. And it can make a major difference on your execution. So, in terms of the algorithms, a lot of it's based on simplistic math. I've just really finished off the futures and options course that I made available with associated code now, specifically in C++, to give you a really strong head start in this sort of stuff. It's also good for career as well. I just put up a video on what it's like on all the different scenarios that a lot of these traders, developers, and these firms go through, even with the quant researchers. Um, so the co-location I've already talked about in terms of getting your servers right on the market, on the exchanges, be it Chicago, London, New York, based on volume. Obviously, market data matters if you want to get it right from the exchanges like the CME, Chicago Mercantile Exchange. For futures data, they pretty well operate on a pay to play. The more you pay, the better data you get, the higher quality data. And yeah, it will give you that trading edge a lot of other, call it retail traders, will not have access to. So, what are some of the types of examples and strategies for HFT development? Well, again, with the course that I just finished off in the world of futures, synthetic options, options themselves, and they get overlaid for just downside protection. A lot of it's using arbitrage, which is one of the big ways market making, where a lot of these operations and the strategies will be used for watching things like call put parity, equilibrium based on supply and demand. When that goes off, you can obviously uh, watch for that and be able to trade off that. I mean, it's done probably in sub-second opportunities, so you got to be very good. Obviously, a lot of people will trade on news-driven events, namely around oil, let's say, what the IEA says about demand or gold or Bitcoin. So yeah, there's lots of opportunity there, knowing what to watch for. So what are some of the benefits and challenges of HFT? Obviously, the HFT opportunities, when you get your strategies right, you get your calls right, and you're coding strategies around this. You get obviously faster execution ahead of the crowd, be in the smart money bucket versus the dumb money bucket, which is unfortunately for a lot of retail traders because a lot of them get clouded over and only want to trade in the dumb money bucket, which they can do okay if they want to chase those returns. but that's not the real smart way of doing it. There's also a lot of argument in the HFT improve market liquidity. There's a lot of truth to that because they will go out, provide the opportunity. Some are corrupt, you could say. Some are going to be honest, and they're going to provide the liquidity, maybe selling options and providing that extra liquidity because they want to collect the income from the premium, and they do it at a high speed. And I think because of the amount of volume that a lot of these HFT brings in, it does lower a lot of the transaction costs as well. There's also a lot of criticisms towards HFT. Obviously, as I said, there's a lot of corruption out there, market manipulation. A big one, and unfair advantages for large institutions, and it can, in an unpredictable way, bring in volatility. So, for example, a lot of people go, well, how does big brokers like Robinhood and Schwab and all them offer either very low commission rates or even no commission? What they're doing is they're selling your order flow to the large trading operations like HFT firms, be it Virtu, be it Citadel, and a lot of those firms like Citadel will be able to, in a fast way, take your order flow, knowing that you have an interest in a particular stock or asset. They can build a trading position to go against you, and you can lose out on your exit position. This is done faster in the blink of an eye. So a lot of the Robinhood um, uh, brokers, the like of them, they are collecting when they sell that order flow over to these large firms. Is it right? No, but a lot of the congressional are just really ignorant or basically bought up in in a bribed way, just turning their eyes against it. And it's banned everywhere else in the EU, Canada. You can't do this. We have a broker like that as well. They don't they don't do that when you put an order in to buy in a Canadian stock exchange, but the order flow, I'm sure, from this firm is sold back to the same HFT firms uh, when there's the U.S. orders because they allow it. So with the regulatory landscape and HFT, there's always this debate on the impact of just general financial markets. There's some people that are for it, some people against it. I'm kind of like mixed, as you can tell. Um, I think it can be, when it's done in an honest way, can be useful, and you can mimic this as well. Again, I've got a whole course and eventual membership built around this. But in terms of the regulatory in the US, I think that the lobbyists for these firms are so big that they are able to um, keep their system going because, as I said, there's a lot of unfortunate corrupt Congress, senators, whatnot, are just they just either blind to it, don't care about it, and just let it keep going. Okay, that's all I could really say about that. So understanding the HFT strategies, there's different strategies, as I said. Part of my course, a big one, statistical arbitrage. You can use latency arbitrage as well, especially when built around the call put parity on certain instruments within the options world. There's market making, which is part of that as well. And when you participate this directly on a lot of exchanges, you do get rebates as well because you're providing that liquidity, and a lot of operators will um, trade just for the rebates as well because they do get paid out through the rebates. So there's some strategies that leverage market inefficiencies and exploit the price differences in different markets. As I said before, there's a notional value. There is a market value. I've done a whole webinar on it just about a week ago, and there are a lot of inefficiencies there. So a lot of these operators and strategies are built around to take full advantage of that, be it through inefficiencies of traditional supply and demand, basically watching the equilibrium in the market. And again, when you look at things like call put parity is another big one that people just don't understand and what's going on. So I've already gone over the various different types of successful HFT strategies. Again, the course I talk about goes through that in great detail as well. And again, there's source code C++ for that, so you can fully understand from a coding perspective that that exists. So, what are the practical tips for HFT for beginners? There's a lot of, I mean, there's not a lot. There's a huge, massive interest in this, in learning HFT. There's different resources, books, beginner books, online courses, communities dedicated to this. One of the big things you need to understand, you hear about no code through AI or the no code movement. I think that's all, no offense, just useless. You do need to know how to code. You need to know how to code well. There are tools out there using AI that can code generate. You still have to master your code. You still have to be able to know end to end on the code that you use and know how to maintain it, how to build off it from a code base that you may want to know. So the big question to take away from what I just said is when you're learning from books, when you're learning from online courses, are these people actually using or even know how to program? Do they trade? Do they have a third party verified trading account? If not, move on. Find people that actually have all this in place because you're just kind of like smoking and breathing in the vapor that comes out of their back end, essentially, because they're just trying to make a quick buck out of the hype that's come around this. So be very wary of that. So, what's the importance of understanding market data? This is very critical. Lots of future brokers provide the data for you. You may need to pay. That's the best place to go. Nowhere else. I do like how TradingView presents it. You do have to pay now extra for it, but it's a lot cheaper to go that route than go through the traditional exchanges like the CME, the NYSE, the NYSE, or whatnot. It's just much cheaper, and you can practice in those environments to build strategies in something like TradingView. It's a great place to do that. It's not going to be 100% C++, obviously, or Python that people want, but it's a good way to really quickly understand how the trading skills can be built up. Obviously, my course is something different as well. Risk management's important. Part of my course covers that with all the different code examples to know what to look for, what to use to generate your, what they call the golden area or gold zone, and where to trade within the options and the futures on how it's presented. Very key. And it's got nothing to do with stop loss. It's got nothing to do with any of that. That's the difference between looking at the retail trader, as I've already referred to, as being in that bucket, but this is how the professionals do it. This is how the smart money does it as well. So, what is the future of HFT and its implications? So there's a huge evolving HFT landscape. There's more FPGA, there's more hardware based. Obviously, there's CUDA or AI to quickly process this. There's a lot of advancements in the AI and the rise of the different alternative sources. In my mind, and I'm sure what a lot of the HFT firms are doing, they are gathering the data from the right places, right from the horse's mouth, be it from the exchanges themselves, building out their own alternative data sources, probably putting them in high speed databases or flat files. I don't know, but they're doing that, or they're just piping it through some form of C++ or an FPGA board using styles like for C++. I've talked about it before many times, and it's been confirmed multiple times using meta template programming as a style to do that. So there's big advancements in that on top of layering over different AI-like ways to optimize in real time to do that. So that's where things are going. I could talk about that, and there are now models and LLMs that you can use to code generate. But again, you got to know how to understand the code, what it means, know how to maintain it, how to reverse engineer it. That's very critical to succeed in this. What are the applications in other industries beyond finance and retail? From what I'm seeing, analyzing this style in HFT can has major impacts on microservices, where a lot of things like Hey, even advertising firms you would use this style, also medical devices, maybe even gaming. I don't know. As I said, that's pretty well what I could present you for now on for beginners on HFT for basically the 2025 where we're at now. If you want to know more, go to my website, quantlabsnet.com. You can get on my Learn tab, get the free C++ book there with HFT. I've got other books, older books available as well that I can let you know about. I'll put a link in there if you want to talk to me on a messenger like WhatsApp or whatnot as well. I can answer a couple of questions one on one for people as well. So that's what I'm trying to do, trying to help where I can. And hopefully this will build more views. And again, if you like stuff like this and you want to learn more about the HFT, we could go deep. We could go very general. I don't know. It just depends upon you, the audience. So comment and they always say subscribe as well. We are already added quite a few thousand people in the last couple of months. So thanks for that. We'll talk to you later.